There's nothing, really kind of outside of what's going on in the markets other than this consolidation process. So it's kind of one of those times you just got to be a little bit patient here. When things aren't really kind of moving, we feel like we have to do something. And sometimes doing something is kind of the worst thing to do. So when you're kind of in these periods, sometimes it's just best just kind of sit and wait and kind of fight those urges to do something, because again, that typically turns out to be wrong. Here's what you need to know before the bell this morning. We did sell off just a little bit on Friday, and again, this has been this kind of pattern here over the last couple of weeks. And importantly, despite the fact that, markets keep rallying back, we are kind of setting some lower highs here, which is a little bit, a little bit, cautious here, but we do have a kind of a declining trend channel that's being built here by the markets. Lower highs, lower lows. Markets rallied to the top of that trend channel on Friday, failed, and then we'll see how markets going to do this morning. Futures right now pointing up a little bit this morning, so right now, at least out of the gate, we're kind of expecting a little bit of a rally here. But again, we continue to hold support in the markets. Money flows continue to be very positive, so that's helping support the markets. But despite all of this, kind of news headlines that we've seen, again, there's certainly a lot of reasons to be cautious, be bearish at this point. I mean, just the headline flow alone has been very disturbing. Our earnings, we're about 80% of the way through corporate earnings. They're going to start to lighten up a lot this week. Good news is corporate buybacks. That window is now fully open really by the end of this week. So we're going to see corporate buybacks really starting to come back to work here. But despite all of that, right, markets just really have not done a lot. We just kind of remain within this trading channel. And it's been a little bit frustrating because it's like, well, the markets, markets aren't really going anywhere, and I'm not really making any money, and it's really volatile, and that certainly weighs on investor sentiment again. And we talked about the psychological pressures when we go through consolidations like this. It does weigh on that kind of investor mentality, and this is what kind of leads us to make mistakes sometimes. Is going through these types of periods. These are healthy periods in the markets. We're just consolidating some of that previous run that we had in the market last year. We had a very big return. Not surprising, the markets are taking a bit of a break here, but importantly, there's nothing really negative going on just yet. So again, despite kind of this churn and grind that we've had, the markets continue to remain in a nice uptrend. You're holding support levels at critical points. The one thing to kind of pay attention to, though, is that we do have, you're very close to triggering a short-term MACD sell signal that could, apply some downward pressure to the market here, at least temporarily. But again, markets should maintain kind of this, consolidation range, this kind of support range that they're in, as long as these money flows remain very positive. And money flows have been very, very strong over the last couple of weeks. And again, as buybacks come in, that should provide some additional support. Markets aren't really overbought to any great degree. So again, there's nothing, really kind of outside of what's going on in the markets other than this consolidation process. So it's kind of one of those times you just got to be a little bit patient here. Sometimes, when things aren't really kind of moving, we feel like we have to do something. And sometimes doing something is kind of the worst thing to do. So when you're kind of in these periods, sometimes it's just best just kind of sit and wait and kind of fight those urges to do something, because again, that typically turns out to be wrong. Again, this market could very well kind of get its act together here, work off some more of this oversold, this overbought condition, and then kind of set up for the next rally. We're still in the seasonally strong period of the year. February tends to be a little bit weaker month, but March, April, May wraps up that seasonally strong period of the year. So again, the bias is to the upside. So again, be a little bit cautious here about trying to do something just for the sake of doing something. Be strategic about your investments, pick your spots, and let the markets kind of help you get those entry points. But that's what you need to know before the bell this morning.